Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.12% there. On the S&P Nasdaq 0.3%, semiconductor 1.7 did get hit much harder today on the semis. Dow up a little bit, Russell 2000 1% transport flat, bank flat, energy, biotech, healthcare, utilities, emerging market. These guys up a little bit. It looks like home builders and retail made a move about 1.17. For home builders, retail about 3.6%. There, Bitcoin made a move 6% positive. Gold, silver miners are up, dollar down, oil up, treasury bond down, up. VIX popped a little bit. Let's do the S&P 500 ETF. Spider, 65-minute chart. Here, so this is where we closed on Friday. And that looks like we opened up this morning. We actually saw a gap up. And actually, with that gap up, what happened was there was a down gap that's been open about 2 months or so. That down gap got finally filled. We've been talking about that level where the buyers need to get up and fill that down gap as quickly as possible. So we all know that once the down gap, I'm going to zoom out later and you'll see what I'm talking about. Once the down gap gets filled, especially that down gap being open for about, 2 months or so, it's going to act as what? Instant resistance. That's what we see here, the upper wicks. And then on the second hour, as you can see, we did see that downturn and then continuation to the downside. And we did fill that up gap, on that third hour. And obviously, that's what bears wanted to see. Bears cannot afford another open gap that's going to be sustained, because you can see there are a couple up gaps right here that has not been filled. And ever since then, you can see bulls are really trying, and bulls are filling these down gaps that's been opened down last several months. And so you can see on the third hour, we filled it, and then we hang around a little bit. Bulls continue to push, bears continue to push still on the fifth hour, and then looks like on the sixth hour, we did find a little bit of support right on the micro term, coinciding with my rising pivot. I'm going to zoom out and you'll see what I'm talking about with that rising pivot. First of all, that rising pivot actually coming all the way from early July, right? We've been following this and tracking this pivot for about a couple of weeks now. As you can see, we're holding above it, and that's what the bulls want to see. Bulls want to see the price holding above it. This is kind of what I was talking about. You can see there's this gap, right? There's a bigger down gap back in, early June, right? June 3rd. And bulls were not able to fill the entirety of that down gap. So they left a little bit, as you can see right there. And that was the start of a huge downturn. This is why when you go up and trying to finish the job, you have to finish the job completely. Otherwise, you're going to, get hit with something like this, right? So, but bulls took time, which is about 2 months here, and finally got up and completely filled that down gap. And then that's kind of what we're seeing, a little bit of that pullback there. So we have the rising pivot. We got the rising support coming from mid-July. This is a potential level of support, that dotted blue line there. So, and then also you can see that there's a gap. There's an up gap here. There's a little bit of up gap there, 409, 405. So this entire vicinity is going to be served as a rather pretty solid support should there be any kind of decline going forward. Okay, as you also can see that my short-term moving average, that's the dotted green moving average there, currently residing at 408, right? You can see that green dotted moving average did act as support back in late July, and then same here mid-July. So it does carry pretty impressive resume, right? So you can see there are many support areas. They must cultivate that higher high in order to establish bullish uptrend once for all. Keep in mind, we've been in this downtrend this entire year. This will be the first midterm higher high. If bulls can able to go up, get above that 416, 417, and reclaim that level. Let's check out that oscillator. So we've been talking about that bearish divergence here, right? So you can see these blue lines at the bottom, these are bullish divergence. We talked about that triple bullish divergence setup with that, consolidation here that looks like a mega trap there. And then once we made a lower low and then we kind of move sideways, building that energy with that bullish divergence, the triple bullish divergence setup, bulls finally made a move. This is the first time since this entire year downturn, right? We got this short-term higher lows and higher highs. But right now, what bears are cooking is that bearish divergence, right? You can see that higher highs here, right? With the lower high on that oscillator. We got a kind of funny looking oscillator action right here. You can see this, this thing right there. It's really very much a neutral stance right now. It's not really up or down. It looked like it crossed this morning, but it crossed, is sideways now at close. Basically, this oscillator is telling us that it's in a neutral ground in the short to micro term. I can pretty much see that, as you can see, the market has been grinding. We are slightly cultivating these higher highs and higher lows. That might give buyers just a little bit of edge here. However, with the bearish divergence in the picture, I have to say that kind of cancels each other out. I don't know if it will cancel each other out. I have to say that bearish divergence still a little bit more dominant here. But again, all signals can fail. So you need to substantiate this bearish divergence if you're a bear with the price to follow. Because as long as you let the buyers hang around above 405, even 409, hang around in this vicinity too long, they'll find a way to kind of neutralize the bearish divergence and make a way to about 425. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and go train tomorrow.